Hi, I'm Debi Peverill from Hales Financial Training Group, and this video is directions on how to fill in your TD1 form for 2025. The TD1 form is used for an employee to give their employer the information they need to take the correct amount of tax deductions from your paycheck. It does not have an impact on your income tax return. It only has an impact on how much tax has been withheld. So if you don't put something on this TD1 form that you are actually entitled to deduct, it's not the end of the world. You will get likely a bigger tax refund because you didn't put a deduction on the TD1 form, but you are eligible to claim it. So what we're going to do is go through the form kind of line by line and explain what goes where. The first part of the form is pretty straightforward. Your name, your address, your social insurance number, and your birth date. All information that you should be easily able to fill in. It is a 2-page form, so make sure you turn it over. It's usually presented, back to front, so you want to turn it over to see what's on the back as well. So the simplest situation, let's say you're looking at this video, you are a single person, you make less than $177,882 a year. You have no dependents, no tuition, no pension, no age credit. You are going to write $16,129 in box 1. You're going to put zeros in every other box. You get to the bottom of it, box 13. You're going to fill in again $16,129. Okay? Turn it over. If you only have one employer, you don't want any extra tax taken off, you're done. Your form is finished, your federal form. You do have to do a provincial form depending on what province you live in. So that's the simplest situation. If you have a spouse who is not dependent on you and you don't have any of those other things, then same deal. You can fill in the $16,129 at the top and the bottom and you're finished with the form. The other deductions we're going to talk about in the order they show up on the form is the caregiver amount, which is when you're taking care of someone else as a dependent who is infirm. The age amount, which kicks in if you're over 65, tuition, if you're going to anything post-secondary, whether you qualify for a disability. If you do have a disability tax credit, then that number, it goes on this form. And the last thing would be transfers from your spouse or dependent. Okay, so if none of that applies, then you're probably done listening to this video. So box 1, there are actually 2 different personal amounts depending on how much you earn. So the basic one, if you earn less than $177,882 a year, then your exemption is $16,129, and that's it. If your income is over $177,882, then you have to use the worksheet because the exemption will actually be less the more income you earn. So you can just leave that number the way it is. If you reduce it, they'll take more tax off your pay. And it is prorated, which we'll talk about at the end. Box 2, the caregiver amount. There are 3 different caregiver amounts. This is the first of them. This is in box 2, and it applies to if you have an infirm child, somebody who's under 18, and the amount that you can claim here is $2,687, okay, for an infirm child. Box 3 has to do with the age exemption. If you're over 65 by the end of 2025, then you qualify for an age exemption. If you earn $45,522 or less, okay, $45,000 or less, then you claim $9,028 as your age exemption. If you earn more than $105,709, there is no claim available to you. You don't get an age exemption if your income is over that number. If your income is between $45,000 and the $105,000, you can prorate the claim. Okay? And again, we'll look at the proration. It's on the worksheet part. Box 4 is pension income other than Canada Pension Plan, the Quebec Pension Plan, the Old Age Security, or Guaranteed Income Security. So pensions other than those government plans. And that amount is $2,000 for everybody unless your pension income is less than that. If you only have $1,200 a year in pension income, then you can't take a $2,000 deduction. You can take a deduction for $1,200 because that's what your income is for. You can offset it. Anything over $2,000 in pension, you still only get a $2,000 pension deduction. If you pay tuition, and it's more than $100. Tuition that's under $100 is not a claim. Anything over the $100, you can claim the full amount. So if you know what your tuition is going to be for calendar 2025, you can put that number here in box 5. Box 6 is for people who are eligible for the disability tax credit. And if you are eligible, you know this because you have sent forms to the government and they have sent back to tell you that you qualify. The amount for 2025 is $10,138. That's the number you put in box 6 if you've been given the disability tax credit. Box 7, do you support a spouse? And this is common law or legally married. If your spouse's income is less than $16,129, then you take that number, $16,129, and you subtract your spouse's income from that number. The number you get is what you can put in box 7. So there's some simple examples. If your spouse has 0 income, then the number in box 7 is $16,129. An example, your spouse has $5,000 in income. You take $16,129, you subtract $5,000 from it, and the amount you claim in box 7 is $11,129. If your spouse has more than $16,129 in income, you put a 0 in box 7. And a question I get asked a lot, should we leave a box blank or put something there? I'd suggest you put a 0 there because it shows that you considered your answer and your answer is 0. If you leave it blank, who knows? Maybe somebody else writes a number in there and that would be bad. Box 8. This is a question I get the most. You don't have a spouse, so you're not married, you're not living common law, but you do have a child under the age of 18. Then you have what's called an eligible dependent. We used to call it an equivalent to spouse, but it's now referred to as an eligible dependent. If this person, child, has no income, then you're going to claim the $16,129 for them as well. If they have an income, then you're subtracting their income from the $16,129 in order to get the number you're allowed to claim. Okay? So a child with no income gives you the full exemption. A child with some income, you subtract their income from the exemption. You can only claim one child in box 8, no matter how many kids you have. And you cannot claim any child in box 8 if you have a spouse. Okay? And there's one tricky situation which, if this applies to you, you probably should talk to your own advisors. But if you have a spouse and you don't live together, you don't support each other financially, then you can claim a child who lives with you. But I would, in that situation, talk to your own accountant. So I want to spend a little more time on these caregiver amounts. There's 3 of them. The infirm child under the age of 18 we talked about in box 2. That amount is $2,687. The infirm spouse or infirm eligible dependent. So a spouse is somebody you're married to that has no income and is infirm. An eligible dependent, it comes up when you don't have a spouse but you do have the dependent. We've already claimed an exemption for them in other boxes. So the box 9 is just for the caregiver amount, and that is $2,687, again, subject to income restrictions. If you have another dependent over the age of 18 that's infirm, so that's not a spouse and it's not a child, then it is possible that you have a claim in box 10 for $8,601. And that only applies if that person has virtually no income. So that would have to be another family member who is infirm that you're supporting and they don't have any income, and that's the caregiver amount that goes in box 10. Okay, and the worksheets. These are the forms that you would want to take up if you're over some limit but under the next one, so you can do the proration. Box 11, amounts that are transferred from a spouse. The amounts that can be transferred from your spouse would be the age exemptions if they're over 65, the pension income if they have pension, tuition up to $5,000, and the disability amount. The most likely ones to be transferred from a spouse would be if your spouse is in school full-time, then you would be able to have up to $5,000 of their tuition. And if your spouse has disability and no income, they can't use this disability tax credit themselves, then they can transfer it to you. Box 12 is transfers from other dependents. So if you have a child who has a disability tax credit and that child has no income, they can transfer the disability tax credit to you. And of course, if you put that on your TD1 form, then your employer will take less tax from your paycheck because they know that you have this credit. Same thing with tuition. Although many parents that I know of have been disappointed that there's a maximum there of $5,000. You might be paying many thousands of dollars to have a child in post-secondary education, but you're only getting a credit for $5,000 of that. So we have numbers in all the boxes. You add them all up, and you put that total in box 13. Flip that page over, and there's a couple questions there. One of them is, do you have more than one employer? This is really important. If you have 2 employers, you can only claim these credits once. So you get that $16,129 personal exemption one time. You don't get it as many times as you have employers. So if half of the year you work for somebody and then you quit and you get another job, when you get that other job, you're not claiming these credits again because you already have claimed them earlier in the year. So you put zeros on the first page and you put in the box on the back, yes, I already have an employer and I've claimed these credits. Same idea if you have 2 employers simultaneously. You have a full-time job and a part-time job. If you're using up your credits in your full-time job, then you can't claim them in your part-time job. So pay attention to that because I do run into in my tax practice where people have a couple of T4s and they've not paid enough tax on either one because nobody knows that they've got the 2 jobs. If you're a non-resident working in Canada, there may be some other, there's definitely other things going on with your income tax return. You should get some professional advice before you fill in any forms. The provincial forms we do are for Nova Scotia and Ontario. You will see those also in YouTube if you're in either one of those provinces. There is a place on the back of this form to put if you want additional tax taken. And when you think about what you're saying there, you want your employer to take tax from your paycheck, send it to CRA so that down the road, hopefully you'll get that money back. You can certainly do that if that's the best use of your money. There's a form, the T1213. So a couple little things around the worksheet, which I said I'd do at the end. If the age amount, the first one, if your estimated income for the year is more than $45,522, but it's less than the 105, so what you do is you take your income, you subtract the $45,522 from it. Whatever you get left, you multiply by 15%, and that's your age credit. And it's on the worksheet. It's just a fill in the blank thing. And don't bother filling in the worksheet if your income's over $105,709 because you're not getting anything for that. The caregiver amount, same idea, and there's 2 of them, the spouse or child or the dependent over 18. You have a base amount of $28,798 for their income. Anything over that, if they make more than that, then you're not getting a claim. So it's another proration deal. Fill in the worksheet and it'll tell you what you can claim. And again, people spend a lot of time on this. This isn't your tax return. This is just telling your employer how much tax you want taken from your paycheck. If you don't put in these caregiver exemptions, but you do claim them on your tax return once you've had more time to think if they apply, and you know the actual amounts of income that these people you're caring for have, then you'll probably get a bit of a refund. So I wouldn't get too worked up about getting that exactly right on your TD1 form because you're estimating income for people for a year that hasn't happened yet. All right, so that's it. Those are all the boxes that you have to fill in on your TD1 form. You should fill it in, give it to your employer, and hopefully it'll make sure the right amount of tax is being taken from your paychecks during 2025.